This is Eric Mwathe with Mwathe.com for July the 8th, 2011, after the end of this week, the short week after the July 4th holiday. And so after the conclusion, this is what the market looked like. The Dow was down about 64 points this Friday. But what's really telling of what I think is probably short-term market hitting some psychological barrier is by looking at the Dow on the daily. This is a Dow Jones daily chart, and you see that we seem to be hitting some kind of resistance here on the RSI, which means don't be surprised to see the market stalling around here for now, as you see that the RSI has come back to some kind of resistance level here. If I take that off, so you can see that it's actually around this line here where we are finding the market hit this level, and we seem to be turning around. Is this the high? Usually hard to tell. You can always tell the high on hindsight, but this is sometimes the beginning of what might end up being a turnaround area in the market. Some markets have already moved to new highs past their May highs, but the overall market, that's S&P 500, the Dow and the Nasdaq, have yet to breach their May 2011 highs. As of now, seems like they might have some kind of trouble doing that unless we break out above this resistance line here on the RSI. If we move along here, let's take a look at the New York Stock Exchange comp, and again you see the red line here on the RSI is showing you some kind of an area where you'd expect psychological resistance to the upside. If you draw a line that connects these points here, here and here, corresponds with where the market being down this Friday. So there's some kind of psychological resistance around here, and it could also be an area where the market could turn around. Another way to look at this is that the market broke down here below the red line, and we've worked our way back. Like I discussed in my last video over the weekend, last Friday, market is hitting this area here and seems to be backing off from that area. That has historically sometimes been an area where a market turns around. So it's back testing the underside of this line where it broke down. So don't be surprised to see the market finding either leveling out here or actually pulling lower to some lower level. Don't know where, but that could be the scenario the market is looking at right now. Moving on here, see what we got next. Now we have some markets breaking out. Like I said, the Dow Transports hit new multi-year highs, 2.5-year highs, and showing some breakout level above 5514.84 on the Dow Jones. As long as the market is holding above those levels, then you have to give the benefit of the doubt to the bullish scenario. So as long as the Dow Jones is above its breakout point of 5514.87, this market could actually be moving higher. So if it moves below that breakout level, then you become a little bit suspicious of the market holding current breakout attempt. As of now, the Dow Jones is urging us to give the benefit of the doubt to the bullish market environment, and that's what we are going to have to do, and we'll keep on finding ideas to the upside, ideas that are breaking out. But if we take a look at the banking index as seen by the Philly index, banking index, we see that the market, if we connect that high and this high, we come up with this black line, and the market is over the last couple of days come here, and we actually hit this level, and we seem to be stalling. So this is an area of resistance, and also that happens to be an area where we have the 50-day moving average, which is now trending lower, and the 50-day moving average is right there, and so the market has come and hit the 50-day moving average and is now seems to be struggling to hold that level. As long as this market can't hold above its 50-day moving average, then there's a reason again to be very skittish about the financial sector being leadership in the market. This might be one of the weakest sectors. So those of you looking to short stocks with options, this seems to be one of the weakest areas in the market. And again, we see that there's an area here on the RSI, if I can show that, where this RSI stalled around here. That is May, and also seems to be an area where we are stalling again here on the RSI. So this is definitely an area where we see consistently that markets are giving us a reason to be very cautious of any potential upside, at least in some sectors like the banking index. Again, if you take a look at the internet index, we are back at resistance level as far as the price action is concerned. We are back at this withdrawal line connecting that high and this high. It now corresponds with an area where we should see resistance, and this is where the market is finding resistance at this. As we go into the weekend, we find market hit that level there and seems to be struggling. So don't be surprised that that becomes an area where this market cannot move higher. And you'll also notice that on the RSI we are doing the same back test. On the RSI, if you follow the red line here, we broke down a couple of weeks ago, and we've just worked our way back to that line and seem to be moving lower. If that continues, then that is confirmation of the market having hit short-term highs and could be seeing downside pressure. Moving on here, if we now see what we have here, we have the same scenario with the home builders index. The home builders index ETF with the XHB again is showing us that the market is back at resistance level, and for the market to move higher, it's gonna need a strong breakout. We see that the market is back at resistance right there, seems to be stalling, and now we are backing off that area. And the RSI shows that this red line here that I draw is an area where the market hit a high here and corresponds with that area over there, which is the highs of May. And we seem to be forming some kind of a double top here on the RSI, again confirming that this could be an area of turnaround. So I'm looking at this market, net giving the bulls the benefit of the doubt, but there's early signs of a market coming into some kind of a top or hitting some kind of resistance. If you take a look at the 3 times a real estate ETF, the DRN, 3 times the real estate market, you see here that if you connect this line here, that high on a weekly chart and this high corresponds with just precisely where the market closed this Friday. So don't be surprised that this here becomes an area where the market finds some kind of natural resistance. Again, I'm seeing a lot of resistance areas on the charts, on the RSIs, and on the price. So here's another example of a line that is showing some form of resistance. Now, as far as the breakout here is concerned, there was a breakout above 78.30, and as long as this market DRN stays above that level, then it's a breakout. And who knows, the stock could, this ETF and the real estate market could continue moving higher. So again, give the benefit of the doubt to the breakout above 78.30, but with a lot of early signs of a potential turnaround. We haven't seen the turnaround confirmed, but we've seen beginnings of what might be a turnaround. So I say, let's give the benefit of the doubt to the breakout potential until it fails. Now, if it so happened down the road we have this market cracking and moving back below 78.30, then you can say that this market is gonna stall. But for now, you give it the benefit of the doubt. Now we're gonna move into the subscriber portion of this video, which is gonna be probably another 5-8 minutes in length, something like that. So let's move on to the subscriber portion of this video.